my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. Bullish engulfing pattern yesterday, which really wasn't that hard given the previous session was an indecisive spinning top. It was nevertheless interesting as it showed the nearby supports and resistances quite clearly. Below is the pair of 50% Fibonacci lines. Support, one at 7200, is the July 21 to June 22 move, and the other is at 7184 from the recent move between March to very early June. Meanwhile, overhead we have the upturning short medium moving average, currently at 72.76. It's resistance. The current situation still leaves us with a small double bottom formed over the last 4 weeks or so. This gives us a primary target X4 for this pattern in the 73.93 area and a secondary harder to reach target X5 in the 74.34 area. Looking below, we still have the big March to early June ascending triangle. Primary target X for this would be in the 66.58 area, with a secondary harder to get target X1. Well, that's down in the 63.80 area. There's also a double top formation, even eve, formed over March and June. This has a harder to reach secondary target X3 in the 66.35 area. All these below have now been threatened, well, for some while, and I'm considering retiring them all completely. So far today, we're a lower open, but an almost immediate turn back up and through the short medium moving average, plus some lesser Fibonacci levels at 72.93 and 73.10 before checking the rise upon approach to the entwined and potentially quite strong flatlining medium moving average, currently 73.29, and the long moving average, currently 73.31. Confirmed break above these resistances could easily see targets X4 and X5 reached if that happens. German DAX futures. Indecisive spinning top yesterday with the tail and tongue more or less caught in support and resistance. Topside saw resistance upon approach to the February 2021 low at 13,356 and to a lesser degree the 2021 low, that is just under it at 13,300. Below was support from the 61.8% Fibonacci line of the big old March 2020 to November 2021 move at 13,115. Now the last 4 weeks action here has made, much as in FTSE futures, the action looked like a possible small double bottom. Thus a primary target for this pattern would be in the 13,430 area with a secondary harder to reach target X in the 13,585 area. You may ask why I haven't given a target designation to the primary target. Well, that's very simple. The primary target was achieved last week. All this action starts to counter last month's monthly key reversal down. However, one pattern does support it. And is my question as to whether the February today action may be a possible very large double bottom. Now, so far today, a break lower below the important 61.8% Fibonacci line at 13,115. It all now depends whether the market will exploit that move lower with closes below and counter the idea of a small double bottom. We have recent congestion below in the 12,885 to 12,775 area, just below the rising short moving average, currently 12,908. US mini S&P futures. An indecisive doji cross yesterday. The topside was again capped on a closing basis by the declining short medium moving average, currently 39.70. This moving average continues to affect this market despite its breaches. Now further above we have Fibonacci congestion around the 50% Fibonacci of the October 20 to January 2022 move at 40.18. This has so far capped the recent market. Overall, the market continues to be clear of the upper tine, currently 38.60, of the January to March bearish Andrews pitchfork. But I've decided to keep the tine still on here, or that pitchfork altogether still on here, and we'll do so until at least mid-August. And the reason is related to the broken bearish shift pitchfork for the same period. You see, at the moment, the market is in between the lower tine, currently 37.73, and the middle tine above, currently 40.73 of this second pitchfork. However, please do remember the time crossovers of these two pitchforks back in mid-May and early June. Then perhaps you will see why the echo of these broken patterns still resonates. Now, I'd highlighted with red circles the earlier crossover of times from these two pitchforks. Back then, you could expect at these crossovers a period of volatility, a change in trend, or a reinforcement of an existing trend. Now, if we look ahead, we could see the next crossover, indeed the last crossover of these two patterns, should they not be usurped by some other patterns or actions in the meantime, would be on the 12th of August. So, that is why these two broken but seemingly still influential patterns, pitchforks, are still on this daily chart. Now, there's one other pattern formed here over the last 4 weeks, inspired by the DAX and FTSE futures. It is a small double bottom type action. This has a potential primary target X in the 4052 area and harder to achieve secondary target X2 in the 4100 area. It all depends on if the market can overcome the short medium moving average and the Fibonacci based congestion of 4018. So far today, well, a lower open on the February 2021 high at 39.59 and a small dip lower. We don't have that much support below, bar the short moving average currently at 39.09 until the 38.30 to 38.35 area. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Invest Services International Limited. And here comes the final bit.